Good morning, everyone, or good afternoon, depending where you are. Welcome to our webinar, Elevate Your Allied Health E&O Expertise, Residential Care, Human Services, and more. We're very excited for this webinar as we have a lot of really good information to share, so we hope you are as well. My name is Lexi Johnson. I am our professional liability underwriter here at CID Insurance. So I want to welcome you here today. I also want to introduce to you our special guest that we have, Daniel Ferreira, who is the Allied Health Division Manager at CID Insurance. He's an expert in this area, so we're very lucky to have him here today teaching this webinar. And I also want to introduce Jacob Cole. He is our marketing coordinator, running everything behind the scenes, making sure it all goes smoothly. So moving on to our webinar logistics. By now, I'm sure you're all very familiar with the process. All participants on the webinar will be muted, but your voice is still very important to us. So please type out any questions that you may have in the chat room. We'll stop and answer them throughout the webinar. And then if we don't have time to address all questions, we'll definitely make sure to respond to you after the webinar. And lastly, there will be a short survey at the end, which we really would appreciate any feedback so we can always work on improving our webinars in the future. So without further ado, I'm going to turn it over to Daniel.
All right, thanks, Lexi. As Lexi mentioned, my name is Daniel Ferreira, and I am the division manager over at CID Insurance. Hope everyone is doing well today, and thank you for being here. I'm going to be discussing all things allied health, and I hope everyone will get something out of this content. Throughout this webinar, I will use the words professional liability and E&O interchangeably. A lot of times these can be used interchangeably throughout the market, but when talking about them in this webinar, it will really be discussing professional liability for allied health risk and bodily injury associated with those professional services. So first, we'll start off with the objectives of the webinar. First objective is to learn about the huge opportunity writing in this arena, the current trends, and why you should shift your focus to allied health. Second, we're going to figure out what classes of business fall under the allied health umbrella. Next, understand the most important coverages your insureds need. And last, we're going to learn from real claim examples, including the severity, frequency, and payouts of these claims. So first, what exactly is allied health? Broadly speaking, allied health consists of medical and human service organizations that operate in the long-term care, miscellaneous medical, and social service fields. The risk found in allied health insurance market can range anywhere from, say, nurse staffing for hospitals to summer camps for children with special needs. Really, a good way to think about it is, any risk that has a medical or human service component can usually find its way into our allied health appetite. So what is the current state of the allied health market? Currently, the market is in a favorable place and is starting to normalize a bit after COVID caused some turmoil in the market, especially in the long-term care space. Long-term care facilities were unfortunately one of the most impacted areas by COVID due to their elderly populations. This caused many carriers to tighten their approach or exit the market altogether, as there was a fear, over wrongful death lawsuits and just lawsuits in general in long-term care facilities related to COVID infections, and then also related to things like shortage of staffing during the COVID pandemic. Now that COVID is mostly behind us, we're starting to see some of these carriers re-enter the market. We're also starting to see new carriers emerging as well. This is coming at a great time as well, given that social inflation has created the need for increased capacity within the market. And for those of you unfamiliar with social inflation is a phenomenon that cost of insurance claims are outpacing the general economic inflation caused by increasing litigation costs, more plaintiff-friendly juries, and increasing costs of healthcare. With social inflation on the rise, many insurers are looking to purchase additional limits, and the increased capacity from new markets will help. Next, and the thing we are most excited about here at Kinsale is the organic growth we are seeing in the market from startup companies in the long-term care, telemedicine, and medical spa classes, which I will discuss in more detail here shortly. These startup companies are going to need quick turnarounds on quotes so they can get their businesses up and running. So carriers will need to make sure this is a focus going forward. So what is the current opportunity within allied health space? Well, as I'm sure many of you are aware, the healthcare industry is one of the fastest growing industries in the US, and a lot of this growth is coming from companies that would fall under the allied health umbrella. Another nice thing about the healthcare industry is that it's much more insulated from a recession than many other industries. A lot of financial experts are still predicting a financial recession in the years to come, and while people pull back from buying goods and services, just due to the nature of healthcare, they can't really forego the healthcare that they need. So we tend to see risk in allied health be a lot more insulated from recessions, which is a good thing if we do see a recession going forward. And as I mentioned in the previous slide, we're seeing organic growth in the market, and it's coming from three major trends, which are fueling startup companies in the allied health space in need of insurance. Trend one is baby boomers. The baby boomer population is the largest population in the US history, with approximately 76 million people, and they're entering an age range where their health starts to decline, causing a need for increased geriatric healthcare services. What does this mean for us? What does this mean for the allied health market? Well, really, it's starting to fuel a large amount of growth in areas like long-term care facilities, home health agencies, hospice agencies, and medical transportation companies. These are big areas for geriatric healthcare, and we're starting to see a lot of startup companies in these areas, and we expect this trend to continue for the next decade as this population continues to age. The next trend we are seeing stems from the need for new flexible types of healthcare, mainly telemedicine, but also other types of mobile and on-demand healthcare services. Telemedicine and mobile healthcare services have been around for many years, but really, with COVID the past couple of years, it's really increased the need for this type of healthcare, and also technological advancements have caused a dramatic increase in the use of these services. As I'm sure everyone's aware, consumers today are really looking for flexible and convenient solutions to everything. And this obviously does not stop with healthcare. Consumers are also much more comfortable with using technology to access healthcare today than they were several years ago. All of these reasons are leading to a large boom in telemedicine and on-demand healthcare services, such as primary and urgent care telemedicine, online pharmacies with home delivery, on-demand medical labs, dental and ophthalmology telemedicine services, and even remote patient monitoring, such as wearable health devices that sends a patient's vitals to a medical practitioner in real time. The growth in these areas will only continue to expand as technology becomes more advanced, which is why we're excited for the opportunities within this space. Next, and not least, the third and final trend is the booming anti-aging and wellness industry. I'm sure everyone has noticed the increased advertising on either social media or TV of medical spas advertising Botox or laser hair removal, or even wellness centers advertising the newest trends such as cryotherapy, cold plunges, and float therapy. And this is showing up in the numbers as well. According to Acumen Research and Consulting and Grand View Research, the global medical spa market size was valued at $16.4 billion in 2022 and is expected to grow to $50 billion by 2023. So we're seeing, in the next 7 years or so, there's going to be more of a double in this market. With this growing emphasis on anti-aging and wellness, we continue to see startup medical spa and wellness centers to meet the growing consumer demand. A lot of these startup companies are small with only a handful of employees, and they will need to find quick, cost-effective solutions for professional and general liability insurance. All right, I've discussed a few of these classes, but here are some other classes that fall under the allied health appetite, and you'll see, as I mentioned before, allied health appetite is very broad. But these are the classes we see the most of. So you have your long-term care facilities, home health care agencies, group homes, adoption foster agencies, medical transportation, pharmacies, outpatient clinics, surgery centers, medical spa and medical labs, medical staffing agencies and social service agencies, homeless shelters, and halfway houses. As I mentioned before, really anything that has any sort of medical component or a human service element to it can usually find its way into our allied health appetite. All right, moving on to some important coverage basics that need to be accounted for with companies in the allied health space. First, almost every company in the allied health space has a general liability and a professional or an E&O liability exposure. And only having general liability coverage will not be sufficient and will leave coverage gaps for the insured. Most carriers will have a professional services exclusion on their GL form, so insureds will need to make sure they are purchasing a policy that provides a dedicated PL limit as well. Next, the majority of policies in the allied health space, especially the professional liability, are written on a claims made and reported basis and not occurrence. Claims made and reported policies have strict reporting requirements that agents and insureds need to be aware of. For claims made and reported policies, the claim must be reported to the insurance carrier in the same policy period that the claim was made. It is very important that agents and insureds understand this, or the insured will be left with an uninsured claim after the carrier denies it for failure to meet the policy's reporting requirements. And last but not least is the need for abuse and molestation coverage. The majority of organizations in the allied health space deal with vulnerable populations, albeit a long-term care facility with elderly or a social service organization that's dealing with youth individuals, very vulnerable populations. So there's a huge need for abuse and molestation coverage. Majority of carriers will have an abuse and molestation exclusion on their policy. So agent and insureds need to make sure they're adding back this coverage through an endorsement that will provide a separate limit for abuse and molestation. All right, now that we've discussed several trends, classes, and coverages, let's take a look at the most frequent types of claims we are seeing, starting with the long-term care space. The four major causes of lawsuits in long-term care facilities are falls, bed sores, elopements, and abuse. And while falls and bed sores tend to make up 2/3 of all claims in long-term care facilities, elopements and abuse tend to be the highest payouts for any claims. When you think about it, this makes sense. Elderly individuals are going to fall time and time again. It's just kind of the nature of getting older. They're also going to experience skin breakdown. Those type of claims are sometimes not really preventable, but you would be able to expect, a facility to prevent an elopement or to prevent abuse within their facility. So, and juries see it the same way, and that's why we tend to see higher claim payouts on elopements and abuse, while falls and bed sores are the more frequent claims. Areas insurers can look to help prevent these types of lawsuits, and things that underwriters look for when underwriting long-term care facilities include favorable staff ratios, proper fall protocols, including the use of fall mats and sensors, proper elopement protocols, including alarm doors and the use of bracelets such as WonderGuard, and proper bed sore protocols such as bed repositioning and the use of qualified staff or third-party providers to provide wound care when necessary. All right, so let's take a look at a real-life example of a long-term care claim. This insured is an assisted living facility in California with a 1 mil, 3 mil PLGL policy. The allegations of the lawsuit were negligence, as a lack of adequate care that led to a resident fall resulting in death, and the plaintiff's demand was a jury demand. This is pretty typical in this type of setting. We do see a lot of jury demands off the bat, rather than the plaintiff making a formal monetary demand, and that they try to get these to go to trial and try to get a jury to hear their state of a vulnerable individual undertaking a severe injury at a facility. So the insurer's defense was similar to what we discussed earlier, that elderly individuals will fall, and a lot of times these things are not preventable. So the insurer had proper staffing in place and favorable fall protocols, but the claim still settled at $300,000 in order to keep it from going to trial in a tough legal environment. Had the insurer not had proper staffing or fall protocols in place, then the plaintiff attorney would have had a much more leverage for a settlement closer to the 1 million policy limit. But luckily, they did have these, these good protocols in place, which allow the claim to settle for a relatively, I guess you would say, modest value relative to the $1 million policy limit. This example shows that when dealing with vulnerable populations, carriers can still face large claim payouts, even if the insured did not have strict liability in the case. Next is medical spas. And medical spas are a bit of an anomaly in the allied health space when it comes to claims. Typically in the allied health space, we're used to seeing very large claim payouts, and claims in medical spas tend to be more frequent but less severe with lower claim payouts. In a medical spa setting, insureds or carriers are typically dealing with lawsuits for burns and scarring from procedures such as laser hair removal or microneedling, rather than wrongful death lawsuits, which you will see in the majority of other allied health classes. Now, every situation is different. Every claim is evaluated on its own merits, but from our experience, we typically see claims from medical spas range anywhere from $10,000 to $200,000, much lower than you would see in a wrongful death lawsuit in a long-term care facility. A lot of medical spas will see a high number of clients per day, so there is the potential for more frequent claims in a medical spa setting. One way carriers will try to combat this is with slightly higher deductibles, such as a $5,000 or a $10,000 deductible, rather than going out with the typical $1,000 or $2,500 deductible that we see in a lot of other allied health classes. The three main things underwriters will want to see from medical spas is proper employee training, proper patient-informed consent documents, and proper oversight by medical directors such as a physician or a nurse practitioner. Not having these items in place will definitely lead to higher claim payouts. So when underwriting files, these are things that underwriters will either want to see prior to the quoting process or definitely prior to the binding process. All right, so let's look at a real life medical spa example. So the insured is a medical spa in Texas with a 1 million, 3 million PL limit. The lawsuit alleged improper care resulting in a burn and permanent scarring on the plaintiff's arm following a laser hair removal procedure. Plaintiff demand of $250,000. In this case, it was discovered that there was strict liability on the insured, given the laser hair removal machine was set too high of a setting, which caused the burn. So kind of different from what we saw in the long-term care example, where there wasn't really any strict liability. It just happened to be an unfortunate event. In this case, we do have strict liability. It was 100% fault of the insured. They had the machine set too high, which ended up causing the injury. So, even though there was strict liability, this claim was settled for $100,000 with approximately $20,000 in defense costs. So well under the $250,000 demand, even though there was that strict liability. And that just goes back to kind of the nature of the injuries that we see in medical spa settings versus, say, a long-term care facility where you're dealing with a wrongful death lawsuit. This was, albeit no one wants to be burned or have a permanent scar on them, those are going to close for relatively modest values as it's compared to say, a wrongful death lawsuit. But on the flip side, say this was a burn or a scar on the plaintiff's face, where it's much more noticeable. It's going to be out in the public every day. The plaintiff would have a lot more leverage and a lot more ability to demand a higher payout in that case. This one, it happened to be on the plaintiff's arm, which is, some area that's going to be less out to see in the public. So, that claim was able to be settled for well under the typical demand we would see from, a facial burn from the same issue. All right, moving on to the last major class we will discuss, which is primary and urgent care clinics. So this class tends to be where we see relatively infrequent lawsuits, but they tend to be very severe when they do happen. And the main causes of claims we are seeing are misdiagnosis or failure to diagnose for things such as heart attacks or cancer. And unlike the long-term care space we discussed earlier, patients in these settings tend to be younger with longer life expectancies, which is what drives the claim values up. Also, the claims tend to be wrongful death claims, which causes the claims to be very severe in nature. All right, so let's take a look at a long-term care or primary and urgent care real life example. This is the last claim example we'll look at, and it is for an urgent care clinic in Arizona with a 1 million, 3 million PL policy. The allegation is failure to diagnose cardiac arrest in a 40-year-old male, and the plaintiff's demand is for the policy limit of $1 million. Obviously, this is a very bad scenario, and the insured had some negative liability aspects working against them, including improper charting and expert witness testimony of improper standard of care. Also, the plaintiff was a husband and father of 3, which only increased the severity of the claim. Assuming he was making $100,000 a year, his economic damages alone would equal to $2.5 million by retirement. Given this and the liability against the insured, the case was settled for $1 million rather than trying to take it to trial and receiving a verdict that exceeded the policy limit. This example, while relatively infrequent, shows the severity of claims in this type of clinic setting. As I mentioned, in this type of setting, you're dealing more often than not with relatively younger individuals, which really drives up the claim value. So rather than dealing with an 85-year-old or a 90-year-old that's in a long-term care facility that might only have 5 years or so to live, in this case we're dealing with a 40-year-old that could have 40 years to live, that has a family of 4 to support. So it's a lot harder to settle those type of claims than it would be to settle a claim in a long-term care environment. So as I mentioned, claims in this type of scenario are typically infrequent, but typically very severe when we do see them. And with that, I've come to the end of my prepared content. So Jacob, if we have any questions, I'll be happy to take those at this time.
Yeah, we actually had someone asking about the turnaround time, and I know Lexi may have, other markets that she might take a risk to, but I know Kinsale is definitely one of her main ones. So I don't know if you or Lexi would like to speak on turnaround time.
Yeah, I can touch on it. Yes, I mean, it's going to vary from carrier to carrier, but at Kinsale, one of our things we strive for is to provide great customer service. So our ultimate goal is to get a quote back within 24 hours, albeit that doesn't happen all the time, but it happens pretty frequently. I would say, at least in under 48 hours is the turnaround time that we would expect for every single quote in our allied health division.
All right, that's great. I don't see any other questions, but if anyone has questions, you can still type them into the chat. Lexi's going to take over on the next slide here and go over her appetite for you guys.
Great. Thank you so much, Jacob. And thank you so much, Daniel, for sharing so many great points and insight on allied health. That was really helpful and great. Here's a snapshot of our target classes. This is a very short list, but it gives you an idea that we can write a variety of classes. So, of course, there's allied health, architects and engineers, technology, and then real estate, lawyers, and the list goes on. We can consider new ventures, risks with claims, or a lapse in coverage. And if you're currently working on a risk, please send it over to me, and I'd be happy to take a look and see what we can do at it, what we can do and what markets that we have. We have applications on our website at CIDinsurance.com, and we also have pre-recorded webinars about specific coverages, different products and many tools to help you along the way, such as quote templates and claim examples. So I encourage you to check it out. This brings us to our last slide. We have our submission email that you can submit your applications to, or you can send them directly to me. My email is listed on the slide. And then lastly, Jacob will be sending some materials to you after the webinar, and again, that short survey for you to complete so we can get some feedback. So thank you again for joining despite your very busy schedules. We look forward to working with you, and I hope you have a great rest of your day.